Hello, I'm Jeremy Allaire, and welcome to The Money Movement, a show where we explore the issues and ideas driving this brave new world of digital currency and blockchains. Today, we're going to be talking about digital dollar stablecoins and central bank digital currencies. We've seen this year in particular, but certainly over the past years, significant proliferation in digital dollar stablecoins. We know new digital dollar stablecoins associated with things like Libra are emerging. And this has really been a very, very fast moving part of the market. A regulatory frameworks emerging for these. And really all of these are fundamentally private sector issued and operated technologies. Although increasingly, leading digital dollar stablecoins are operated through broader arrangements, to use a phrase that the Financial Stability Board has used for global stablecoin arrangements, things like Center Consortium, Libra Association, and the like, that have multiple stakeholders and are seeking to set standards. Now, at the same time, both the topic and the substance of central bank digital currency has also been emerging, again, for a host of reasons. CBDC has emerged in part as a reaction to the private sector and internet-led innovations of digital currencies. It's emerged because, well, frankly, some of the largest economies in the world are actively in the process of operationalizing new central bank digital currencies. This is part of this broader macro environment of the diminishment in the use of cash as a product from central banks, desires for continued payment system innovation, improving financial inclusion, broadening and supporting cross-border transactions, all of these as factors driving the increased interest in CBDC. Now, some are saying that there really can only be one digital currency dollar or one digital yen, or pick your currency. And that it's not really the role of the private sector to issue money if you view stablecoins as private sector issued money. Others are saying that digital dollar stablecoins are fundamentally a payment system innovation, and that the private sector has led in this field for decades, in fact, even longer. And that standards and regulations and ultimately connectivity to central banks and their balance sheets can give us the best of both worlds. Really excited today to explore these issues on the money movement. We are joined by Visa's head of crypto, Guy Sheffield, Neha Narula, the director of MIT's Digital Currency Initiative, which is an institute that has been leading research and development in crypto, digital currency, and now central bank digital currency models. And Robert Bench, AKA Bob Bench, AVP at the Federal Reserve Bank of Boston, and a key contributor and collaborator on the future of digital currency with the Federal Reserve. Welcome, everyone.
Good to be here. Thank you.
All right.
Thanks, Jeremy.
Nice to see you all. So cool. I think try and set the stage a little bit. There's a lot we can talk about, and it's really a pleasure to have each of you who I think bring really profound perspective on these topics. But let's just get started with some quick introductions and kind of what brings you to the subject matter, and then we'll dive in. Maybe we'll start in the upper left, or at least for me, the upper left with Guy.
Yeah, thanks, Jeremy. I'm Kai Sheffield. I'm on the global fintech product team at Visa, where I lead our crypto products. So really excited to explore these issues today.
Excellent. Neha?
Thanks, Jeremy. Hi, everyone. My name is Neha Narula. I'm the director of the Digital Currency Initiative, which is based out of the MIT Media Lab. We focus on cryptocurrency and digital currency research and technology.
Excellent. Bob?
Hey, it's Bob Bench. I'm an AVP at the Federal Reserve Bank of Boston, and our team works on general purpose CBDC research and exploratory applied prototypes for CBDCs.
Excellent. That sounds it sounds cool. We're going to dig into what that means here. So, actually, maybe we'll start with you, Bob. And I remember at one point a meeting I had at the Federal Reserve in the not too distant past, and I met someone whose title was product manager for cash. And I thought, that's pretty cool. There's a product manager for cash, and cash is a product of the central bank. And most people don't really think of it that way. Like, you know, we've got products that we sell as companies, but central banks have a product. It's called cash. So what's the role of cash as a product in the United States? And then, you know, how might that inform how the Fed thinks about digital cash?
Yeah, that's a great question. And I was surprised too when I came to the Fed from Circle, right? And, you know, we had a lot of kind of product questions that Circle's great PMs thought about. The Fed PMs think the same way. What do our customers need? What's their use case? How do we make this easier for them to use, more accessible? So you think about just currency generally, right? For a currency's goal is to be a unit of account, a medium of exchange, and a store of value. And cash being the original form of currency here in the US, that's what we want it to be first and foremost. And our cash office is really great at knowing their product and knowing their customers. So what is our product, right? So there's about 2 trillion of our product out there, right? In US of a $20 trillion money supply. Of that $2 trillion, we have about 1.4 trillion or so of that's hundreds. A decent amount of that, which is overseas. And then the remaining is smaller denominations. Our economists also and product officers also understand how that money moves, where it moves, and why it's moving where it is. And so when we think about trying to build a cash alternative, certainly not a cash replacement, but what would a prototype cash alternative look like? You know, one of the key questions for us is, are we thinking more medium of exchange, or are we thinking more store of value? And that's one of the critical questions that we needed to think about and bring in the Digital Currency Initiative at MIT to help us think about. Because we think that you can weigh the technology to be more focused on store of value, say having a much more secure platform, or you can have it much more focused on a medium of exchange, which may require higher throughput and faster settlement. And as you know, Jeremy, those are really important technical trade-offs. Yeah. And so when we think about what's the goal, potential goal of a prototype GP CBDC, is are we looking for people to have something to store, and is security the ultimate concern, or do we need it to be fast, right? So you can get a cup of coffee very quickly. And that's an important trade-off, and why, you know, working with folks at MIT's DCI is so important to get the best answers in front of policymakers.
It's great perspective. I mean, this is obviously affects the broader cryptocurrency industry as people think about these trade-offs between security, scalability, and access. And access might be thought of as decentralization, or sort of kind of who can participate. And those all, you know, those all play off each other, obviously. And it's cool to hear people at the Fed thinking about that. So that's awesome, Bob. Maybe a related question, Kai, which I'll direct to you, which is, you know, when I think when people think about Visa and the vision of Visa, you even kind of hear it as this sort of building a cashless society, and in some ways, you know, Visa represents for much of the mainstream world this move from analog to electronic money, which has happened over decades, and Visa's really led the way globally on that. And you know, I think now clearly Visa and you in particular are focused on cryptocurrency, digital cash models, the future. You know, how do you think about digital cash in relation to historical electronic money?
Yeah, so the foundation of Visa was built, you know, on the electronic movement of money. You know, decades ago, you know, D. Hawk was talking about how, you know, money would become, you know, alphanumeric data that can, you know, move across the world, you know, at the speed of light. And so, you know, we see, you know, digital currencies, you know, they represent an evolution of money with these, you know, new forms of, you know, cryptographic, you know, bearer assets. And as money evolves, we think it's important for Visa's network and solutions to evolve with it, to ensure that new forms of money can be transferred in a secure and convenient manner. And so we're seeing increasing interest from clients across the world, looking to utilize digital currencies in new payment flows. And so, given this interest, we want to help to shape and support the role that digital currency can play within the existing payments ecosystem.
Yeah, that makes a lot of sense, and I think we'll come back to some of those issues. This sort of where are the boundaries of digital cash, electronic money, payment systems. And the interesting thing about this space is that it all kind of is one big soup as well. Neha, I know you've thought a lot about these trade-offs of security, scalability, decentralization. I mean, those are like, fundamental things that I know have been work that you and your colleagues have looked at for a long time at DCI. I'd love to just hear your thoughts on those trade-offs as it relates to the specific prospect of a digital cash product, whether it's private sector or public-private or public altogether.
Yeah, thanks, Jeremy. I think, and we've all been reiterating this, security is paramount, right? If payment systems break, if monetary policy goes awry, that has real ramifications on people's lives. They can't buy food, they can't buy medicine, they can't eat, they can't get paid. And we're seeing some of these things now with COVID as it's taking time for stimulus checks to get mailed out, things like that. So security here, reliability, stability, that's priority number one with a digital cash system. I mean, I'm sure, the folks at Visa think about this all the time. I think we all have this vision of this really great future where we have money work the same way that information works now digitally, where we can program with it, where we can encapsulate it, we can feed it into apps, we have these open APIs, things like that. I think we're all working towards that future. But we have to remember that none of that works without the security, without the underlying stable system. And a lot of the work that we do at DCI is really thinking very carefully and deeply about security. What are the different ways that things could break, all the way up and down the stack, from the hardware on your machine to the operating system, to the libraries, the compilers you're using to build the code, how can backdoors get into that? We have to be very paranoid. We have to think very carefully about the security of these systems. And, I also think it's worth remembering that, this sort of, at least the cryptocurrency revolution started with Bitcoin about 12 years ago. That's not actually that long, these systems have not been around for that long, and they're brand new cryptographic and distributed systems protocols. And those things take a while to harden. It takes a while to bang on those things and make sure that they are correct and that they're not going to fail in unexpected ways.
Yeah, I mean, this is it touches on a lot of things. Open source is sort of and really I think a lot of the decentralization movement and open source software, the cathedral and the bazaar, the kind of famous essay that looks at how do you crowdsource the best, the most secure code is the code that's most open and most transparent. And there's a real desire to kind of experiment out in the open and to iterate out in the open and to leverage that the intensity of peer review that is the real world on these things. And so, I mean, the internet sort of evolved that way, and certainly, I can remember, first generation internet. You say, hey, you're gonna put a piece of software, you're gonna be able to put a word processor in a web browser, and people would have laughed you out of the room, like, this is like a joke. You can't do it. It's not gonna work. Or with video, the idea that you needed centralized, highly controlled, resilient infrastructure like satellites and cable systems and so on to deliver television. But then, actually you could do it with open standards over the open internet. And this balance between centralization, decentralization, and the constant ability to increase quality of service, security, resiliency on decentralized systems is sort of a feature of the internet. And I guess this is I think to some degree what this discussion of stable coins and central bank digital currency and will they coexist, and is one of these sort of born and grown out of the internet as standards, and is another kind of built to be operated as a kind of controlled, resilient system. And I'm interested to hear how each of you think about that juxtaposition and how that could play out. Anyone can jump in.
Yeah, I guess I'll start in. I think you kind of have to break down fiat-backed digital currencies into three parts. It's kind of what type of money is backing it or collateral. Who is responsible for operating the technology that actually issues and redeems it, and who operates the network that digital currency is transferred over. And so you could start to see the spectrum of design choices that are emerging, where at one end you have these private sector led the leading existing stablecoins like USDC that are backed by treasuries or commercial bank money issued by fintechs and operated transferred over public blockchain networks with thousands of nodes that are validating transactions. And then on the other end, you could imagine a digital currency backed by a central bank reserve, issued where the technology is operated by the central bank to create it, and the network is operated by the central bank. I think there's a lot of room in the middle of options for public and private sector partnerships to be able to back and issue digital currencies and operate the networks that they run on. And so we think more digital currencies will emerge in the future, and they'll land somewhere across that spectrum, and they could potentially coexist or engage in market-based competition for various use cases based upon diverse properties that they can have.
Yeah, I mean, there's sort of Fedwire money, which is a particular form of electronic money, and then there's Visa electronic money. And today, at least, Visa electronic money has a lot more utility value than Fedwire electronic money, just for everyday kind of stuff. But Fedwire money is like really important for a certain class of very important scaled transactions with a very clear set of controlled, trusted intermediaries, and sort of it's that interplay. Other thoughts from you guys?
Well, I think one thing. Go ahead, Anna.
Okay, I was just gonna respond to the security sort of point you made before about open source. It's really surprising. I think sometimes people think because something's out in the open, it means that people are looking at it. There is a very long tail of stuff out there that no one is looking at. And if someone, it's very time consuming actually to audit all of this software, to really break it apart. And there aren't necessarily the right incentives in place to do that yet. I mean, the incentives around open source software is really, really complex. We see things like, bugs in OpenSSL and in really, really core pieces of software, which tons of billion-dollar companies rely on, but it turns out they're being maintained by a couple of people in their spare time. So, I think that there really is this issue with open source software that we need to figure out how to solve. And we're really seeing it in the cryptocurrency world where there's so much money sloshing around, where how do we fund that very deep, important work of doing the auditing, of looking at all the software, of testing it rigorously, of really making sure that it's top notch. I just wanted to make that point.
Yeah, no, it's like the bar is so much higher in the technology for digital currency than the kind of protocols that we can get streaming television and it's great over the internet, but sometimes broadband goes down, and what do you do? If the internet goes down and you've got digital cash, what do you do? Interesting questions like that. I guess this I want to come back to this higher level theme, which is when we juxtapose these sort of regulated digital dollar stable coins versus envisioned public sector central bank digital currency, how much of this is a payment system innovation versus something that actually really has an impact on the actual sovereignty of money issuance? Because I think about stable coins as protocols and formats for the use of sovereign money on the internet, and as fundamentally a very significant, payment system innovation. It's more than a payment system innovation because of the programmability and all the things that come with that. But I think there are others that have a view that if there's a token that represents $1 and it's issued by someone in the private sector, well, that's not the role of private sector. And where are we in this? Is this a payment system innovation? Is there, can the technology be created by, operated by the private sector, or open source combined with the private sector, combined with public sector supervision and engagement? Like, where do we sit in those trade-offs? Bob, I'd love to hear your thoughts.
Yeah, I think this goes into, Jeremy, some fundamental questions of how are you approaching this problem? I think you can make it where it is exclusively a payments innovation, a pure technology innovation, where you don't change the intermediary stack, for example, right? So you can keep the current system where the central bank creates the money. That money goes to a commercial bank, which has a Fed account, and they use their leverageability to effectively 10x that money, if you will, and create through lending, right? And the rails change a little bit, but the underlying intermediary structure doesn't change. And that can make certain types of money more interesting from a programmability standpoint. It can make the rails more resilient, theoretically. It can make them more efficient and more safe. But the overall monetary system isn't changing. And for most people, the monetary system works pretty well. I think what the stablecoin approach, and we certainly discussed this when we were at Circle, is it takes the money outside of that constrained environment, or that limited environment of the commercial banking. Even though most fiat-backed stablecoins are ultimately commercial bank deposit tokens, if you will, it lets them leave that environment, and that can be really interesting. Certainly there are people for some reason or other who are not in the banking system. And that is a critical challenge for the Federal Reserve to address, and for all central bankers to address. How do we make sure financial inclusion is at its maximum? And we need to get better at that. And so we need to explore some of the type of technologies that Circle has explored and your peers have explored to understand how do we reach that 7% or so of people who for some reason are not part of the banking system. And the good part about this project with MIT is we're trying to look at all those policy levers and what can folks like Neha do and our team do that can make more people in the system, or can really fundamentally change how people access the system.
Kai?
Yeah, one thing I'd add is we've kind of started with really closely watching the rapid growth of the stablecoin ecosystem across the world, and I think one thing that's really stood out has been the emerging kind of global vibrant developer community that are building new products and services on top of stablecoins. And so I think you could argue that stablecoins and public blockchains, they can help lower that barrier to entry to building new digital wallets and financial services. And that's great for consumers to have more options in innovative products. And we're starting to see this with our business today. Just with we launched this FinTech Fast Track program last summer to make it easier for startups to partner with Visa and issue Visa credentials. Almost a third of the companies that are coming to us are building on digital currencies in some way. So we're really excited about it as really a platform that developers are using that could build new products and services that can then help address financial inclusion.
Yeah, I mean, it's fascinating to watch, obviously, and seeing a smart contract based stablecoin that people trust. That it's essentially an open API for dollars on the internet, and it's amazing to see what people are doing with it. So, I mean, we've seen hundreds and hundreds of companies innovating on USDC, and like they don't have a relationship with us or Coinbase. It's just like they're just building, and we're in the very early stages of the innovation curve of programmability. And look, there's going to be bad things that happen. I say it, but like there, we've seen, DeFi contract hacks. We've seen all kinds of things, which, if this was sort of the official system of dollars in the economy, we'd say, whoa, hold on a sec. But at the same time, the rapid pace of innovation is obviously really, really significant and commendable. I guess I'd love to actually just ladder off of that and just imagine some scenarios and just get all of your perspective on if this changes the calculus, in particular of this question of the coexistence and or integration between the stablecoin world and the central bank digital currency world. So, one scenario, which I think is not an unreasonable scenario, is that over the next 2 to 3 years, there's hyper growth in stablecoin usage, and it goes from tens of billions of stablecoins into the hundreds of millions, or maybe $1 trillion plus or more, and then all of a sudden it's as getting to a level which resembles the distribution of cash. And there are scenarios obviously where large scale internet firms are deploying this, and obviously there are large scale internet firms deploying this, but that a broad range of internet companies and fintechs and large financial institutions to sort of adopt this, and you sort of have that hyper growth. Does that affect how the Federal Reserve would look at this? Is there a de facto digital dollar at that point that needs to be then regulated differently, the reserve model regulated differently? So that's one scenario, and it's not an outlandish scenario, certainly. And then another scenario is more geopolitical in nature, which is say the digital yuan is sort of free floating and made widely available on the internet, and countries, businesses, individuals that are transacting with China, which is probably in the next 5 years the largest economy in the world, it becomes a sort of over the top, I like to say, kind of currency system. And does that change the calculus of how CBDC, at least from the United States perspective, and private sector stablecoins would work together? Anyone want to take the bait on that one?
I'll say something really quick, which is, we started working on CBDC in around 2016. That's when we first hired, we hired our first person from the Bank of England.
Absolutely.
And, at that point, I think we were hoping things would move quickly, and they were moving very slowly. So it's definitely the case that all of the things you just cited have accelerated this conversation dramatically.
Yeah.
I think a lot of folks who thought maybe this was 20, 30 years out, not something they had to worry about right now, realized, no, this could be a 5-year problem or less, and that we really need to get smart on it. So that definitely the things you mentioned have been an accelerator.
Yeah, and I'll agree there that with Neha, certainly, I can't speak on behalf of this Federal Reserve System, and our team is a technology team, right? But what's critical for us to understand, and one reason we've launched this is we know that the private sector, like Circle, like the Central Consortium, for example, are building really interesting technologies that we need to understand deeply. And so regardless if they go to a certain asset threshold that becomes systemically important, and you saw a little bit of that with China, right? The public statements by the People's Bank of China, one of the leading reasons to use the DCEP program was because of systemic risk of Alipay and WeChat, right? They thought that there was systemic risk in those two companies.
Yep.
And so the Chinese government really had to learn how Alipay and WeChat worked, right? To help build their own system. One thing our team does is we're building our own internal testing environment to put technology like Center's USDC technology or the Libra technology through a comprehensive testing environment to understand what kind of at least technology stresses that would put on themselves internally if they got to a scale of $1. Because we think that you have to understand the underlying technology if that does happen, and what kind of systemic risk that would pose, at least from a technology standpoint.
Yeah, I would just add that there's clearly growing demand for stablecoins, and I think as stablecoins grow, they present this kind of live ecosystem to observe, what developers are building and how consumers and businesses are interacting with these, cryptographic, bear assets. So I think, as the stablecoin ecosystem matures, we can start to see what features and what infrastructure, emerges, and if it's addressing use cases that central banks, might be looking for CBDC, and if there should be, different properties or different designs of digital currency to be able to do that in a safe and secure way.
So there's several pieces that I want to ladder off of from comments that each of you have made that I think are really interesting and worth talking more about. So one is, and actually, speaking of the Chinese DCEP, there's sort of the two-tier model that people talk about, right? Where you have there's some component that's centrally administered, and then there's another tier, whether it's large fintech bank-like firms or actual commercial banks that can operate this technology, and there's sort of a two-tier model. And I guess the way I've thought about it, at least, is could private sector arrangements for standards for things like digital dollars, like USDC, could those eventually just become standards that were supervised by the Fed or other central banks, but the underlying money becomes central bank M1 or an equivalent, but the sort of technology is in some ways more like how Visa grew, right? Which is the central bank doesn't run the card networks, but it's it became a private sector consortium of firms that said, we're going to build standards for interoperability for electronic money settlement. And it's going to sit a layer above, Fedwire, or a layer above, other networks. And it seems inevitable that, like, at least in the West, like a two-tier model is what's going to happen. And it's sort of a question of, is it something created from scratch by you guys, or is it something that happens organically through public-private kind of collaboration?
Yeah, I mean, I can say the two-tier models, it's what we do now, right? The Federal Reserve does not handle individuals. That would be a major mission change for us to start managing individuals' accounts or individuals' wallets. And the private sector does a good job of that. So there is a neat fit there. And America has a long tradition of, the public sector with its mission-driven approach, working with the private sector to innovate well. I mean, putting a man on the moon, the internet, right? The whole growth of the internet, that was a public and private sector partnership that continues to this day. So there's a really nice fit there, Jeremy. I think you're exactly right. Because that opening accounts, that's something we don't do for individuals right now. And that would be a big change. And the private sector does it pretty well. And firms like Circle, when we were at Circle and learning about how to really reduce that friction to get more people in the financial system, I think that's something the private sector has done really well. And we certainly need to learn from.
Mm-hmm.
Yeah, I really quick, Jeremy. Yeah, someone said this to me before. I'm just going to totally steal it from them. But a nice way of looking at these big projects like the internet and the moon landing, things like that. You've got .gov, .edu, and .com, right? You've got like all these three different pieces that have been really critical in bringing these things to bear, right? And it's not one side on its own. Yep. You need obviously the innovation of the private sector. You need the regulation, the representation of the people from the public sector, and you need neutral research, fundamental research and design that often comes from academia and that can't really be provided by the public or private sector necessarily. So, it's really interesting to think about. Yeah, there are .orgs, but it's really interesting to think about these pieces of the triangle.
I like that concept a lot. It resonates well here. I guess another piece of this, which has been talked about, and we've talked about it a little bit here, which is digital currency, generally speaking, stablecoins as they exist today, and potentially digital cash as a product of central banks, in theory, have this attribute of being bearer instrument money. And even in like a two-tier model, right, if it's just an electronic record at a bank, it's no longer a cash product. It's no longer bearer instrument money. And I think there's a lot of discussion about privacy, anonymity, self-sovereignty. These are like core attributes that have drawn people to cryptocurrency. But that also tie into the product manager of cash at the Fed thinks about those issues. The U.S. Treasury certainly thinks about those issues. But where do we think we need to land on that? And that's one of the most controversial pieces of all of this. It's one of the lightning rods that gets people on I don't want to say both sides, but on multiple sides of this pretty fired up, because when you have bearer instrument money and it has the speed and power of the internet, that changes things. Just like when you opened up the internet as a communications medium to everyone everywhere, that changed things too. Like my kid can go get recruited by ISIS on YouTube, or people can gather and crowd organize a revolution in a country that's a dictatorship, or things that, and they use Tor and they use secure communications to subvert authoritarian regimes. And there's all these sort of trade-offs: privacy, anonymity, self-sovereignty, and this is all going to kind of come, I don't want to say crashing down, but come together in the design of digital currency models. And where do you think the Fed sits on those issues?
Well, I mean, I can't speak on behalf of the entire Fed, certainly, but I can.
Come on, Bob. That was like a softball.
Yeah. Sorry. I mean, I think there's some really key issues there, right, Jeremy? And I think it's not just how does the Fed think about security and privacy, right? Per Neha's point, when we think about future payment systems, security is everything, right? The dollar can't break. That being said, we do think about in our research questions of, what kind of data transmission happens on that network, right? So the Bitcoin network transmit transactional data, right? It's Jair, Jair's wallet, but not even Jair, wallet A sent to wallet B, X amount of BTC, right? And that's all it sends. A world in which you may have a private sector actor doing all of that, right? In your world, having a second layer of, say, a monopolistic actor doing it, that's a lot of information that one private sector actor gets. And, I've heard you say this a ton of times. Mark Andreessen talks about the original sin of the internet, which is, right, people's data for ad revenue, right? And that's something people think about for public goods, right? Is how, if we have a public mission to provide central bank money, how do we do that and protect the public's data? And this is where our work with Neha and her team is really important, because when you think about security, how you have to really think deeply about security and challenge that security question, that if you're going to collect any data, you have to understand how is it protected and how robust is that security protocol. I mean, even Bitcoin itself isn't entirely secure. We all, people who know it well enough know that that's true. If you get enough mining power, Bitcoin can be attacked. So we need to think about these fundamentally, because it is a public good, and the people's financial data is really important.
I remember, Neha, when Sean and I first walked in and talked to you about what we were doing with Center and USDC. And I think one of the criticisms that you had, which is totally legitimate, was, well, this is centralized and it's centrally issued. And there was a lot of focus, I think, at DCI on censorship resistant forms of digital currency and supporting that development and privacy related technologies and the like. I'm sure that continues to be a focus for DCI, but as it relates to this exploration on central bank digital currency, what are your thoughts on how those designs can play out with public sector money?
Yeah, well, I think, in some ways we're kind of running two really huge experiments right now. We've got the cryptocurrency world, which is, as you put it, very decentralized. These groups of developers from around the world, all different time zones. It's very hard to get on a meeting together, just writing the software, putting it out there, people running it, people picking it up. It's amazing, right? And we are seeing massive amounts of experimentation and people putting tens of millions or hundreds of millions of dollars worth of tokens and cryptocurrencies into contracts, and sometimes losing that money, right? We're seeing a lot of experimentation and variation in that world. And these systems were specifically built and designed to be hard to turn off and hard to regulate and hard to sort of find those points of control. And there's a certain value to that because it allows a certain type of experimentation to happen that maybe couldn't happen in other more sort of like different types of structures. That said, money, especially fiat money, you know, the dollar is not a decentralized good. It's you don't fork the dollar, right? It's not a, you know, decentralized governed sort of a thing. There's the Federal Reserve, there's the United States government, there's, you know, there are these actors in place who created the dollar and thus have control over it, and we need to acknowledge that. And so, you know, I don't think fiat currencies are going anywhere anytime soon. I think that they are still pretty important.
Depends which ones.
Yeah, maybe it depends which ones. They're still incredibly important to people's lives and make a huge impact. And I think it's important to look at that area as well when we're thinking about redesigning this technology, which is, you know, kind of what you're doing with stablecoins, I think. So really, these are two different approaches that have a lot to learn from. Like, we can learn a ton from the lessons of the last 12 years in the decentralized world to think about how to carefully design and architect a CBDC. I mean, that's the idea here. That's why we're doing this, because we think there's some value. So I don't see these two areas at odds at all. I think they work together in order to sort of have that experimentation, have, you know, that crazy stuff happen. A lot of people are going to lose a lot of money, unfortunately, but they're taking that risk, and then learning from that and bringing some of the best ideas from that into the fiat world.
Mm-hmm. It's great perspective. I want to touch on something that Kai had referenced as well, which is, and actually, you know, Brian Brooks, who now is the head of the OCC, you know, talks about, you know, the dollar needs to remain competitive. That there's a competitive economy for fiat currencies, and there's obviously the monetary policy is part of the product, and you know, the sovereign credit and all of that good stuff. But then there's the utility value. Like, you know, how do you build better features? How does the dollar become a more feature-rich currency? And now we're moving into a world where there's actually competition on the utility value of fiat currency when you are now moving to this realm of digital currency. And so you can design features, which is very, you know, I mean, cash, you know, what's the security technology or the anti-counterfeiting technology might have been features of a physical note, but now there's like real utility. And this touches on something, again, that Kai, you brought up, which is the amount of developer innovation that's happening with programmability, that's happening that, you know, this, in some ways, and this is, you know, part of our view and vision, which is payments just becomes a ubiquitous free service on the internet. There's actually, you know, it becomes this much broader thing, and that this isn't just about payment system. This is about a bigger set of innovation, which is sort of in the economic contracting layer, that now businesses can construct and program economic contracts in really, really profound ways. And that's like the ultimate utility value that exists here. And I'm curious to hear, you know, each of you reflect a little bit on that layer of all of this, whether it be on what's happening in the private sector today, or what might be possible in public sector related CBDC initiatives. Maybe I'll start with you, Kai.
Yeah, so I think there used to be a clear line between, you know, software companies that would provide, you know, software as a service solutions, you know, for businesses to help them do things like manage expenses and simplify accounting. And then you had financial institutions that would help businesses send and receive payments. You know, we're now seeing a trend where software companies are embedding payments, you know, into their workflows to be able to add additional value for their customers. So just a quick example, you know, if you're at a large company and, you know, you want to spend $100,000 in AWS, you might fill out a purchase order on a Word doc, you know, email it off for approval, you know, have it land in the accounting department, and then they use their financial institution to make a wire. this is now being replaced by software. There are companies where you submit a request, it's approved, and it automatically initiates payments. And so this design space of how can you program payments as a feature within software platforms is really expanding. And many companies are using Visa products to do that today. And we're excited to see if smart contracts and digital currencies can further accelerate that trend.
Mm-hmm. Bob, or
yeah, I'll go ahead. I think going into the question of programmability, I think this kind of goes back into that multiple layer system that you discussed earlier, whereby when we talk about our general purpose research, we're really focusing on, as Neha said earlier, security, right? Security has to be the ultimate issue there. And when you add programmability, certainly you expand the attack surface of that software or the digital currency software. And that's something we think about deeply. There is a world in which, the underlying prototype could be extremely secure, but have very limited programmability. But those private sector partners or commercial banking partners, they may be able to add that programmability. And I think they already are. So banks are having open APIs now. Certainly the FedNow program, which is 24/7 real-time gross settlement, that enables banks to work a lot faster with their payment sector partners. But on our research, which is the core general purpose CBDC, security is really the ultimate factor we think about. And so programmability is a nice to have, but at any threat to security, it really is subject to strict scrutiny on our end.
Neha?
Yeah, echoing that. I mean, I really think there are different stages to technology, right? And it's a big question. What stage are we in right now with the cryptocurrency world and cryptocurrency technology? When I think about having a really robust platform, I think about a layered approach. So I think about the internet stack. I think about those protocols, how the bottom layers were not dependent on the top layers. It wasn't all squashed into one virtual machine. There was really nice, clean separation. Yeah. And as we are, doing our research and looking into what we can do with programmability, we found that with a pretty small number of core features, you can get a lot out of them, right? If you use the right signature scheme, if you have time locks, things like that, you can really get a lot out of the upper layers. Now, this is a pretty difficult paradigm to program and experiment with, is the problem, right? The paradigm that's easiest to sort of experiment with and try lots of things is one where you basically can write JavaScript. You can have thousands of developers who are writing all of these easy to write contracts, and that's where experimentation can happen. But I really think, and I might be wrong, but I really think we're going to have to translate what works in that area into a more robust architecture. That's what I suspect we'll need to do.
Makes sense. I think we think about that layering as well, and we in some ways look at USDC as a protocol, and it needs to be independent actually of blockchains. It can't be tied to a specific blockchain, and there's so much innovation happening in different fundamental architectures for this. And so that's something that we'll be rolling out a lot more of, is sort of how do you use this as a protocol on very different types of blockchains that support different use cases and the like. So I always like to end with predictions from folks, and clearly it seems like internet scale money, digital cash models are here. They're emerging, they're growing, and I'll sort of ask two related questions, which is sort of within this kind of regulated digital dollar stablecoin space, whether it's USDC or Libra USD or others that still don't exist. 3 years from now, what do you guys think there will be in circulation in those?
All right, I'll go first if no one wants to talk. So, I'm really bad at predictions, so I never get anything right. But I will raise the question: isn't the U.S. dollar the ultimate stable coin in a way? What does it do competition-wise if something does come out and is really has the right features around it? How how does the stablecoin arena evolve? That's something I'm really curious about. I'm not making predictions necessarily, but I think it's going to be really interesting to see.
Kai?
Yeah, I'm not making predictions either. We're seeing a ton of interest and activity, and I expect that to continue, but I can't put a prediction on it.
Right, and Bob, will there be a Federal Reserve digital dollar, central bank digital currency in 3 years?
I cannot say that there will be a digital dollar CBDC in 3 years, but what I do hope to have with a lot of Neha's help is an open source platform that we're going to offer the world to take a look at what might work, so that not just the US can benefit it, but from any country or any software developer wants to explore how this might work better.
That's cool. I like that. All right, very well. Well, this has been a really nice conversation, covered a lot of ground, could have gone on a lot of it. We went over a bit. So I just want to thank each of you for joining today. Thanks so much.
Thanks for having me.
Thanks for having us.
Thank you.
Absolutely. So a great deal to synthesize there, and these themes are going to just amplify, I think, very much month over month, year over year as we go forward, and we'll continue to come back to these here on the Money Movement. Next week, we're actually going to step away from stablecoins, and we've really spent an enormous amount of time on stablecoins and the fundamental innovations in blockchain technology with them. And we are going to, dive for a moment into the Bitcoin thesis and really try and take a look at where we are on the journey of the Bitcoin thesis, what that core thesis is. It is today the largest digital currency in the world and continues to grow in its use. Very different design center, very different set of goals in many ways than things like digital dollar, stablecoins, or CBDC. And we're going to be joined by two significant leaders in the space. One is Michael Sonnenschein, who is Managing Director of Grayscale Investments, who manages one of the largest publicly investable Bitcoin funds in the world, and is part of the Digital Currency Group. And Dan Moorhead, an earlier guest on Money Movement, but will be rejoining us. He is the CEO and co-chief investment officer at Pantera Capital, one of the great kind of global macro thinkers for decades, actually, before applying his global macro thesis to Bitcoin. And we'll hear from both of them on where we are on the Bitcoin thesis and journey. Until next week, stay well, stay safe, and stay informed.